It's the Get Up and Shine Show, where your host Lillian Taylor brings you intimate and inspiring interviews from people who faced off with serious life struggles and prevailed. As our guests revisit with the moments, realizations, and tools that helped them break through, you might just walk away more empowered in your own life. It's that time. Get up and shine.
Hi, this is Lillian Taylor with Get Up and Shine.
65% cited medical bills as being a major reason as to why they were needing to file bankruptcy. How many of those people had health insurance? And the answer is 85%.
We spoke with Rick Hazy about a surreal experience with health crises severely compounded by medical malpractice. Even though financially savvy and a prudent saver, the financial burden made a major dent. What happens if you haven't got a nest egg? We're here with Charles Maurice. Hi, Charles.
Hi, good afternoon. How are you?
I'm fine, thank you.
Good.
You got a chance to listen to Rick Hazy's interview?
I did.
I think that you told me you have a similar story in terms of...
Yes, I do. I've been in the financial services world for many decades. I was working for a pension administration company when I was diagnosed with stage 2 colon cancer. Not expected, asymptomatic, hadn't been feeling great but hadn't been feeling bad either. I had the pleasure of dealing with Western medicine, who very kindly and carefully took care of removing about 14 inches of my large colon, along with a good-sized malignant tumour, put me back together, and thank goodness, straight after that they diagnosed it as being low risk and that there had been no spread. About 2 months after that I started chemotherapy. Had about 5 rounds of that out of 12 before they stopped it because the neuropathy, which should have been coming on much more towards the end of the treatment, started very early. And by the 5th round, I was dealing with neuropathic symptoms 24/7. And because the tumor had been encapsulated or there'd been no spread, this was more of a precautionary thing as opposed to a treatment base. So they decided after 5 rounds to stop. But
in the meantime, they did a lot of damage to a perfectly healthy body.
They did.
Yeah. You were insured at the time, too.
I was insured, and this was part of the sort of scary story with all of this, is that my maximum out-of-pocket based on our health insurance was $6,500 in any year.
Were you in Florida?
I was in Florida, in South Florida. The problem was I was diagnosed the week before Thanksgiving, 2010, so I very quickly reached my maximum out-of-pocket for 2010, and then immediately rolled into January and started chemotherapy and immediately hit my maximum out-of-pocket for 2011. So one would think $13,000, but in fact it finished up being about $9,000 for each year for various reasons. A particular person on the surgical team was not in network, which surprised me because they already had my insurance details, but I guess they're not really worried about that. They're more worried about getting you healthy, and I appreciate that. But my bills were $18,000 for the 2 years, which was really about over the span of about 3.5, 4 months.
Wow.
And not really anything that you can be prepared for unless you have it pre-planned, which I didn't.
Yeah. Most people don't. Most people don't think that they're going to get ill, or if they do get ill, it's going to be like it used to be, where you went to the hospital and there was usually some grant from the Catholic Charities or some organization that was going to take care of everything. If you couldn't take care of it, not anymore.
Well, you know, what happened to me is pretty much the same as happens to a lot of people, which is you have a health crisis and you just want to get better. And you don't really think about the bills. In fact, I am a life insurance agent in the state of Florida. So, of course, when I was looking at the benefits offered by the company I worked for, I knew better not.
Oh.
But, you know, I looked at it and said, oh, short-term disability, that makes so much more sense than cancer insurance.
There's actually cancer insurance.
Of course.
Oh, I didn't know that.
Absolutely. And the difference is, generally speaking, you can have lots of different types of insurance that we are aware of. You can have health insurance, you can have gap insurance, short-term disability, long-term disability, but there is a whole menu of insurance products that are called cafeteria plans. And you'd probably sort of be aware of those accident plans offered through an employer or some kind of hospital indemnity plan to help you cover the cost of things like that.
Right, yeah.
Cancer plans. I remember looking at the cancer plan benefits as I was going through my employee benefits at the time. I went, short-term all cancer. What am I going to use? I'll use the short-term disability. And unfortunately, I never actually got to claim it because I wrote an email to my employers about 12 days after I was taken into the emergency room saying I'll be back at the end of the week. Mm-hmm. And that was enough part-time for an hour or two.
Okay.
And, of course, that completely did away with the short-term disability claim. Oh. And even without that, I was going to be back at work after about 3 days of claimable time. Mm-hmm. I would have been much better served to have had the cancer policy because 1 in 2 American men are going to suffer cancer in their lifetimes.
Oh, how about that?
And 1 in 3 American women, unfortunately.
I didn't know that.
Yes.
Well, why isn't this more known?
It's a really good question. I mean, you may know it from things like the television when you see Aflac.
I've seen Aflac commercials. I know that at Duckwell, but I've never, ever heard of cancer insurance.
What Aflac did in the beginning of the industry, really, because they were pretty much the first people out, they offered these types of benefits, including cancer plans, heart and stroke plans, life insurance, what they call simplified issue, small amounts of either term insurance or permanent insurance, along with accident plans and hospital plans. And the idea is, especially now when deductibles and maximum out-of-pockets on people's health insurance are so high, the idea is if you have the correct professional who can come in, look at your health insurance, and then look at the areas where you're, should we say, exposed or you have some kind of risk, then they can sit with your employers and devise coverage that would be really good for the employees and also very affordable.
Now, are any of those coverages available directly to
absolutely. You can go directly to some of the insurance companies. The difference between individual and getting it through a company is that the company plan is usually cheaper. In other words, because it's a company as opposed to an individual, you get economies of scale.
Spread across the group, yeah.
That's it. And, of course, a wider spread of risk. So you generally have lower premiums and more benefits.
Now, if I were to go to the, I don't know, what is it called, the Insurance Commissioner's website, would I be able to find a list of all the different types of insurance and what companies cover them?
Absolutely, you can. There's on the Insurance Commissioner of Florida, they list all the insurance companies who are licensed to practice in the state of Florida, and also all of the insurance agents who are licensed to work in the state of Florida.
Okay.
In fact, you can see which agents are appointed with which insurance companies, so you can check out every agent that you come across in the state of Florida, not just for life insurance or health, but also for property and casualty, that sort of home and automobile insurance, or commercial insurance for businesses, things like that.
Okay.
You can also go on something called the Internet. That seems to be quite popular these days. You may have heard of it. Professor Google, as we like to refer to it in our household.
Okay.
And you can ask the questions. And again, based on the social media presence or the campaigns that the insurance companies like to do, you can find lots and lots of different solutions to lots and lots of different answers, including things like employee benefits, as I like to refer to them, or voluntary benefits. And the big difference between some of these and things like health insurance is that when you have health insurance offered through an employer, especially when they're a bigger employer, then the employer has to offer at least 50% of the coverage for the health insurance.
Okay.
If it's under 50, they don't, but, most companies are trying to retain their good employees, trying to reward them, and sometimes money and bonuses is not everything that is on offer. In fact, a Harvard Business Review showed that if companies have a good range of benefits, and not just money bonuses, but also in terms of health, and in terms of supplemental benefits or voluntary benefits, they have a much higher retention rate, they have a better level of morale in their workforce, and more loyalty and better production.
Because the people feel taken care of and they feel secure in their future.
That's absolutely right.
Nice.
So the question that you would ask me sort of part of all of this as to, well, what are these benefits? In the case of the voluntary benefits, they are normally paid for by the employee. So in many cases, the premiums can be paid pre-tax, which means the government says, we want you to have this type of coverage so you can take it out of your salary before you pay taxes and Social Security.
So you don't even have to report it as taxable income.
It actually lowers your reportable income on your pay stub so you pay less taxes. So it's a really cool thing.
Yeah.
Sometimes employees want to give help, sometimes not. Usually at the end of the day, most employers are happy to bring in the experts so that you can have the benefits offered to the workforce, but the employees themselves cover that. And again, the amount of the premiums is small relative to the benefits.
Well, for instance, I mean, is there a typical? Is it like $5 a month or $30 a month? Or?
If you get into the better insurance companies, you can have a range of benefits. For example, the accident plans that we offer at the moment ourselves through major national companies. I won't say their names because we're not here to advertise, we're here to talk about something of interest and educate. But somewhere between about $4.50 and $5.25 a week.
Now that's if you have any sort of accident or a car accident specifically?
Any type of accident, on the job, off the job, 365 days a year. The ones that I'm thinking of specifically work in anywhere in the U.S., anywhere protected by the U.S., so Puerto Rico, Guam, U.S. Virgin Islands, things like that. And it literally covers you for any accident, from the littlest to the biggest.
Oh, that's amazing.
Yeah. And then you can have hospital plans. So, for example, in my situation, I didn't have an accident. I had a sickness. I had a colon tumor. In my case, even though at the time I didn't have these benefits, I now have all of them.
Yeah.
If I were to get sick again, heaven forbid, then I'm really not worried about my deductibles and my maximum out-of-pockets, because between the hospital plan that I have now and the cancer plan for somebody who's already been diagnosed, I am not worried. I will be getting more money than the total out-of-pocket, even if they sort of increase it by an extra 25% as they did with me originally.
Now, tell me about gap insurance. I've heard of that for cars.
Right.
My car was totaled once.
I'm sorry.
And thank goodness for that gap insurance. So how does that work? It just covers everything that is not covered by insurance? Well,
it's interesting you should ask that. Most people, when they are presented with the options for their health insurance, they don't really understand what they're getting into. And, we kind of joke, often people will have a presentation in the morning, in the afternoon they don't remember what they agreed to, and that's kind of human nature. But you mentioned gap specifically. So gap insurance works hand in hand with your health insurance. Most people don't really understand what they've got or what they're paying for. So say, for example, you have a $3,500 deductible for a single event and a maximum out-of-pocket of, say, $7,000, which is about average these days for people with health insurance in the US, however scary those numbers are. What people are offered is often a way to try and cover some of that deductible. So gap plans can be very good or they can be less than very good. It depends on the level of coverage you ask for or the level of coverage you can afford. There are a few also little ins and outs that people don't realize. So say, for example, you are not admitted to the hospital. So something happens and you're in the emergency room, but you're not admitted for 24 hours or more, then the gap insurance will have a limit, which is not the same as if you get admitted to the hospital. So people often get these, how can I put it nicely, these little shocks.
The devil's in the details.
The devil's in the details, where they're expecting to be able to go to the hospital for whatever situation, not have any out-of-pocket, and find that they are. They're responsible for potentially quite a lot. And the other side of it is also, that a lot of people don't realize, is that if a procedure or something that in your treatment is not covered by health insurance, then the gap insurance will not cover it either.
Oh, wow.
That is a biggie that a lot of people are not aware of, which is why the voluntary benefits come into play. Because essentially what you do is you pay your premium, you have a list of benefits. If something happens, you get paid on the benefits, and that's a big difference as well. Health insurance and gap insurance pays doctors, hospitals and helps with prescriptions often. On voluntary benefits, the benefits are paid to the policy owner, the employee. So when you're having a health crisis and everybody else has their hands out saying, pay me, here's another bill,
Right.
we come along and say, hey, who would you like your money paid to? Yourself, or is it your husband or your wife or your spouse? Who would you like the money to come to? Because in all cases, unless you request that money is sent somewhere else, the money from a voluntary benefit plan comes back to the employee.
To the employee.
Yes,
okay.
ma'am.
That's fantastic. I'm just thinking about a dear friend who had cancer.
Yep.
Did not have health insurance.
Ooh.
Had stage 4 breast cancer, applied for Medicare, Medicaid, I don't know which one.
Medicaid.
And was kept waiting for forever as it progressed, and finally, of course, the claim was denied, which I'm still trying to wrap my mind around, and she had to fight it, and by the time she actually got the insurance, it was really, I saw her recover somewhat, but she never made it. But in the meantime, she had all these bills and she could not work, and she had a teenage daughter, Right.
Yeah. Here's something that people really don't understand. If you have no form of health insurance and you have some kind of health crisis, you are going to get billed at whatever the full billing amount is by the medical facility. Even if you have horrible insurance, or what we would call sort of lower coverage insurance, there is already something called a negotiated rate by the insurance company where they say to the hospital or the medical facility, yeah, you can bill us whatever you want to bill us, but this is the rate that you and I agreed to, and that's what we're going to give you. And often it's 50% less, it's 60% less. It's a significant number. But if you don't have any health insurance,
you don't have any help.
You come in and you get the number set by the medical facility. So I'm throwing out an example. Say you had some kind of surgery and the hospital bill is $70,000. Your health insurance may have negotiated that procedure and that stay in the hospital and the anesthesia and everything else at $30,000. If you have the health insurance, you probably have some kind of deductible. And even if it's a high deductible today, maybe it's $7,000. You've gone from the first number, which was huge,
right,
to a lesser number of 30,000, which is still huge, and then down to 7,000, which is still a big number. And most people today do not have $7,000 sitting in a bank account where the bank account is called, here is my deductible, just in case I get sick. That just doesn't happen.
And so as an aside, it is also very critically important for people to just pinch a little bit away and put it off for themselves every single month. Do not touch money.
If they can, absolutely. Yeah. Alternatively, they can take something like a voluntary benefit, which is really, in most cases, pennies a day, usually tax-free or tax-preferred, and know that if some kind of crisis happens, it's not that they're going to be welcoming it, but they're not going to be worried about the financial aspect of it. Again, if you had a $3,500 deductible and you had $500 to pay, would you be okay with that? Well, most people could figure that out. If you had $3,500, that's a lot more difficult for people to look at. And unfortunately, often one hospital visit will lead to a second hospital visit. And if you have, say, a big deductible of $6,000 or $7,000, you can get there very, very quickly.
Yeah.
So, at the end of the day, planning ahead will make it a lot easier to bear financially.
Yeah.
And, here's another little thing that you need to be aware of. It's a bit of a scary number, but of all the people who filed for bankruptcy in the state of Florida, I think 2017, 65% of them cited medical bills as being a major reason as to why they were needing to file bankruptcy. And then, here's the scarier question. Does anybody know how many of those people had health insurance? And the answer is 85%.
Oh, heavens.
In the old days, that number was much smaller, and people, if they didn't have money, would go to the hospital, and in many cases, the hospital would say, oh, you have no money, we'll just let it go. Today, the hospitals can't afford to do that, and in many cases, they very quickly sell your debt, so that deductible, to a bank. So often when you get a call from an organization that sounds a lot like a hospital, and it might be such and such financial services, you're actually talking to a bank.
I see.
And the bank loves this. The bank usually gives the hospital about 50% of the bill that they have outstanding, which is the budget that the hospital's billed in. And then they get to go after the person who is in the hospital and negotiate to be paid. You know, if you don't have any money, then they'll put you on a payment plan. It could be $100, $150 a month for a good number of years. And it's presented to the patient that, well, it's really good because you're not paying any interest. The problem is, remember, the bank only paid 50 cents on the dollar for this, so they don't need to have any interest because they're making awesome interest just by getting you to pay every month for 2, 3, 4, 5 years. Really, a little pre-planning can be amazing. We have clients who have had accidents, and literally not only do they get enough to pay off their entire annual out-of-pocket deductible, but also to put many thousands of dollars in their pockets. I have had the pleasure of telling several people that they're getting $10,000, $15,000, $17,000 back sometimes. And remember, even though there may have been pain and suffering in there, as much pain and suffering is going to come from trying to pay that hospital bill. So when they're able to pay that whole bill off and still have, in some cases, many thousands of dollars in their pocket
to catch up with the other
bills. Maybe they weren't able to work or go back to work as quickly as they could, things like that. So, you know, a little pre-planning now can be such a blessing later on.
Okay, I'm going to make an appointment with you. We're going to be talking today.
I look forward to that. Do you have anything else that
I do. Just one more question.
Please.
I spoke to a gentleman today who said he could get health insurance, but because he had some sort of a problem with his back before, it was excluded. Are there coverages for problems that are otherwise excluded specifically?
Right. What we're talking about is pre-existing conditions.
Yes.
So right now, under the Affordable Care Act, which is still the primary health legislation in this country, yes, there is no ability for insurance companies to exclude you based on a pre-existing condition, which is part of the reason that the health insurance companies have explained why premiums have gone up so much.
Right.
When it comes to voluntary benefits, certain plans can have pre-existing, so I can use myself as a good example. Accident plans do not have pre-existing conditions. Why? Because you are only covered from the date that your plan starts. Say you had an accident the beginning of May, and you were covered from the beginning of May, you're covered. If you had an accident in February, but you were only covered from the beginning of May, you're not covered. It's as simple as that. No pre-existing on accident plans. Hospital plans, medical bridge, shop, whatever they're called, they can and often do have pre-existing. They're going to be looking for the bigger things, whether it's previous examples of cancers, lung disease, neurological issues, back. You know, a lot of people suffer from back issues. They will ask certain questions, but in a lot of cases when you have corporate voluntary benefits, they are issued on something called a simplified issue basis. So they ask big questions. As long as the answer to all of them is no, or it's within a certain amount of time, then the employee is covered. There are also some companies who will allow, if there's a bigger group, that there can be coverage regardless of the history of the person, as long as there are enough people, as you said before, to spread the risk. So you can have that. In my own case, I have the accident policy, which is great. I have a hospital plan, which in my case does exclude cancer, all invasive cancers, but I then have a cancer policy that covers all cancers because I was already post 5 years in remission when I applied for that policy.
I see.
The difference is between that and a policy for cancer that's never been diagnosed, there is normally money for an initial diagnosis. So there is no money for me for an initial diagnosis, but there is really good money. God forbid I have to have treatment. And this is pretty much every year. Some policies are one-time payments. Sometimes they are forever payments. Depends on the plan. And then I have something called a heart and stroke plan. Again, God forbid I have either a heart attack or a stroke or some other serious issue that is there to help not only cover the cost of the hospital, but also to help put money aside for myself and my family, because there is a pretty good chance that if I'm suffering from either of those, I'm probably not going to be working for a while.
Right. I think it was very telling that women generally do not have heart attacks or strokes until they hit their 50s, and then they're very vulnerable to them until they are past working age, and I guess 60, 62.
I'm guessing that's something to do with menopausal times?
I think it's going back to work after the kids are gone.
Oh, that's an interesting thought.
I don't know why, but that would be a prime coverage to have for a woman who
absolutely.
is in middle age.
No, absolutely. I mean, of course, we all know that women generally outlive men, and there's probably many good reasons for that. Probably that in many cases women are generally trying to take better care of themselves because they have their families.
I'm not going there. I don't know why.
I don't know, but I mean, clearly the tables for life insurance state that very clearly.
Yeah.
That women do generally outlive men.
Still? I mean,
yes.
I can imagine so when men were having to be in the workplace and suffering all the stress of the concrete jungle and women got to stay home. But now that the women are as engaged in the workplace and men are as engaged in taking care of the family, I wonder if there's been any shift in those numbers.
The life expectancy for people in the U.S. has increased, but women are still, on average, going to outlive men. There are many jokes about it. I won't even go there because it's, we're being a little more serious. But no, that's just the way it is. Women generally outlive men. A friend of mine recently said to me, I said I was stressed. He said, was that good stress or bad stress? And I said, there is no such thing as good stress. It's just stress. And he kind of looked at me and said, well, you could be busy at work. I went, then you're busy at work. It's positive, but there is no good stress. Stress is stress. There can be acute stress and less acute stress, but stress is just generally not good for anybody.
Okay. Charles Maurice, thank you very, very much.
It is my pleasure.
Let's do the math. A 50-50 chance of facing the choice between tens of thousands, if not over $100,000 of debt, or $10 to $20 a month to hedge? No-brainer. Siphon off $4 to $5 a week and avoid the pain. Think of it as a cup of coffee for your wallet. Ever thought that sharing your story might help someone else? Meet Milana Walter. Milana, tell our audience about your story your way.
Many, many times, hearing someone else's story gave me that jolt of hope needed at the time. Can your story help someone? At Your Story Your Way, we help you tell it as a short story, book, or script. No one knows your story better than you. So what are you waiting for? Visit yourstoryyourway.com.
We return next week with Rick, talking about personal integrity in a corrupt work environment. Until then, every day, get up and shine.
We'll return next Tuesday with more great content. Catch a preview at www.getupandShineShow.com and join the mailing list for access to great tools to help you. And remember, it's your time to get up and shine.